Welcome all to the Film, Television, Video panel. It's going to be an interesting day. I'm going to let Julia Borston, our moderator here, introduce everybody, but I'll introduce Julia quickly. She's the media and entertainment correspondent for CNBC, and so I think should be able to direct a good discussion here today. Just a couple of quick reminders. We are recording this for both posterity and for the overflow room next door. So if everyone can turn off their cell phones, Blackberries, any wireless cards, anything they have on, it unfortunately makes it very hard for the microphones to work and so prevents other people from hearing next door. And then separately to that, as people come in, if it gets too crowded, there is overflow seating next door in S171. So I'll turn it over to Julia, but thank you all for making it.
Thank you all for coming today, and I think we should just start off by having everyone on the panel tell us a little bit about what they do, not just what their title is, but what they do on a day-to-day or week-to-week basis. And since we are talking about video content, film, TV, home video, tell us what they think the biggest challenges to their industry or the biggest change coming to their industry in the next couple of years. Do you want to start off?
Sure. I'm Jeff Small. I'm the Chief Operating Officer of DreamWorks Films. That's the live-action version, not the animation version. What I do day to day, which is, as I said before, the most difficult question that I'll probably get, is I run everything inside DreamWorks that's not on the creative side. So effectively, I run physical production, I run business and legal affairs, which is the talent deal making part of the company, finance, operations, administration, marketing, kind of everything that isn't developing scripts. And as far as what I think the biggest change is probably going to be in my business over the next several years, I think it's the way that consumers are going to decide how to consume filmed entertainment in the future. And I think one way to look at it is the size of your television. These days, I just went out myself and bought a new television, which is it's big. I'll say it. It's big, it's flat, and it looks fantastic. And I put it in my house. And the thing is that it's great that I have one and I work at a movie studio, but people all across the country are buying these televisions, and it's a new way. They're becoming more interested in the quality of the film that they're watching and how it looks on this huge screen they have in their living room now. And does that change the movie watching experience? For decades and decades and decades, people have basically gone to the movie theaters, which is still an important communal event, so to speak. And then maybe you'll rent the video later and watch it on your little teeny television. But now, with your huge television and your surround sound and everything, you can wait and get that movie on DVD and watch it in your living room. And at this point, I still think that there's value to watching it in the theater. I think that still is the kind of seminal movie-going experience that's important to film lovers. But it'll be interesting to see if that changes over time. So anyway, that's what I think.
Evan?
I'm Evan Young. I'm a Director of Broadband Services at TiVo, also GSB 2000. My day-to-day responsibilities, I'm responsible for marketing development and operations for TiVo's video downloading services. So everything from the announced Amazon Unbox deal to get movies and TV shows downloaded to TiVo as opposed to recorded, to getting YouTube and user-generated content on your TiVo and home movies, and whatever is not recording off of TV but going over the IP path is what I'm responsible for. I guess in terms of things affecting the industry, my bias would be obviously the IP delivery of video. You're going to see, obviously, between the satellite and the cable providers, there's this new way of obviously being able to deliver video, some to the PC, for things like YouTube and Google Video. It's an interesting way for people to get new content, and whether you're delivering that to TiVo or a PlayStation 3 or an Xbox 360, it's essentially an end run around the existing broadcast infrastructure. So that's quite interesting. I think, to echo Jeff, HD throws something else interesting into the mix, which is that there's not enough bandwidth right now to do things like HD over the internet. You can do things like YouTube, you can do cell phone video over a 3G network, but if you want to get full 1080p, there's not any kind of infrastructure to do that over IP yet. So we'll see how the industry evolves in that direction.
Cameron?
So my name is Fraser Cameron. I'm an associate principal with McKinsey. I guess that's a junior partner. Explaining what we do reminds me, I'm Australian, of a conversation I had explaining to the Immigration Service what a consultant was. Hopefully you'll be a better audience. I generally have a couple of clients at a specific time, and I do growth strategy in media, which means that, so for instance, right now I have a due diligence working for a media company in New Zealand. I'm integrating a online portal with an offline media company in Moscow, and I have a piece of work here in the States to change a media event to try and increase its ratings. And so it's just a sequence of questions that I'll answer together with a team for a specific client. Generally, that client will be a cable company, a TV broadcaster, or a TV cable company. My clients face different questions depending on where they come from, but they all really boil back into the same thing. If you're an MSO, you're very interested in what's going to happen in online video because you're looking at a substantial CapEx bill for your high-speed data service. And you have a set of levers at your disposal, pricing levers, net neutrality levers, that can make online video sink or swim. If I'm a broadcaster, I'm very interested in the implications of alternative reach, particularly where that can be additive to the overall viewing experience, but I'm not really quite sure how to do that profitably. So for instance, streaming lost is going to cost more than I gain in advertising right now. And if I'm a cable company, I'm really not quite sure what online video could bring because I'm constrained by the contracts I have with my distributors, the MSOs, but yet I have a significant amount of content that could be valuable. And so I think for all of those players, the answer really is, how will online video evolve and what are the drivers?
Micah?
I'm Micah Green, and I'm an agent in the motion picture department at Creative Artists Agency. It's really hard to explain what I'm doing because it changes month to month, but essentially I'm among the few agents in the motion picture department who don't represent talent, and I really represent projects on an individual basis. And I guess the spirit of what I do is trying to fill the gap that's been created as more independent financing and independent distribution options have presented themselves to high-end talent in Hollywood. It used to be the case that a producer really served exclusively the function of lining up financing and distribution for their projects, and it used to be a very small, a finite universe of financing and distribution partners that they'd work with. That universe of financing and distribution options has become infinite, and what me and my colleagues do is try to identify new opportunities for talent, the most attractive and aggressive deal structures that we can to ensure that we're making the best movies, clients are making the best movies possible, and making them in a way that gives them as much control and back-end upside as possible.
And what do you think the biggest change is going to be in your business?
Yeah, that for me, it's clear. I mean, what we're always doing is we're sort of racing against the changing economics of the business. And from my perspective, it's different for an agent who represents exclusively, let's say, an actor, and they really are literally just thinking about how to maximize their quote and their dollars on an individual movie. I think my colleagues and I are looking for opportunities to keep the business healthy. We're really looking for a way to make sure that films, not only are they profitable on a sort of an ongoing basis, but that there's predictability to their revenue, because the way in which we're able to get what seem on the outside is very creatively adventurous projects financed is that we've come up with methods to predict their potential downside, their risk. And as windows start changing, as the economics of retail distribution of DVDs change, digital platforms emerge, it gets harder to predict how much money one can actually make from a good movie. So that's the challenge for us, is just staying ahead of it.
And I think we all are probably familiar with what Andrea does since she did the keynote speech earlier. But maybe you could tell us a little bit what you think the biggest change or challenge is coming up.
Look, the biggest challenge for me is one that has been changing for a long time, which is, and I mentioned this earlier, that there's more and more choice, whether it's cable channels or online or video games. There are many more things fighting for people's attention now, and it's only getting worse. And along with technology that allows you to watch things in all different places. So the challenge for me is to continue to find creative development shows that are a shared experience that hit broad amounts of people and that compel them to watch the TV in large amounts, whether it's a Dancing with the Stars where there's a huge community, like you have to see that show that night, or The Bachelor was at its height as well, and it's finding those ideas, which gets harder every day to touch people and make them talk about it.
Well, it seems like one thing that's clear in all of these different fields, television, film, is that distribution is changing dramatically. And we've got things like TiVo, we've got Amazon downloads, and I guess one question to start us off is sort of where is distribution headed? Is everything going to be on demand? Is all of this content going to be available on demand? And who wins in this new distribution world?
I don't think that everything will be on demand. I think that it will get closer to that way, and I think generally the overall framework of the way that people view entertainment will be somewhat similar. I think people will still go to the theaters. I think people will still view it at home, and maybe the way you view it at home will be kind of some hybrid of your television and your computer, and some people will still watch it on your computer. Whether you watch it on your little iPod or not, that's questionable. But as far as on demand, for instance, with digital delivery to cinemas, once that rolls out and becomes more commonplace, that will give theater owners the ability to stagger showtimes better. And to react to consumer demand a little bit more efficiently. So if they're seeing that movie one really isn't packing, the theaters, but they have something else, then they can easily switch the shows and say, we've just opened up another show at 7 o'clock of whatever, Mission Impossible. And I think in that way, consumers will win, but I think that if we as studios are always trying to think forward ahead of it so that we can monetize that efficiency, then we'll win as well.
Micah, you were talking earlier about sort of this distribution on iTunes, distribution on different digital formats. How does it work for your filmmakers? Where do they fall on this?
Well, there are two categories of filmmakers. There are filmmakers who've made films that everybody wants, and there are filmmakers who've made films that no one wants, and it's the reality. So, I tend these days to be fortunate enough to work on primarily films that a lot of people want and compete for. And when we're in those circumstances, what we're trying to do is very proactively feel out, on a film-by-film basis, what's the market value in a given movie in every media worldwide. We want to know if a particular film has the potential to perform much better on DVD or much better through Netflix than another film might, then we want to sort of tweak our deal, either carve rights out and do direct deals with a particular media distributor ourselves, or we'll adjust the overall, the all media distribution deal that we might do with a studio to reflect where we think that the greatest value is for media to media. Now, on the other hand, the films that typically can't get out, the ones, let's say as an example, it's Sundance every year, and that's sort of a part of my beat is to go to Sundance and sell movies there, or try to. There are hundreds of movies that premiere. There are maybe 10 films that sell for any significant number that get meaningful distribution. So the rest of those films kind of languish. Many of them don't get distributed in any media. They just play film festivals, private screenings, and they're kind of self-distributed. They don't even typically get onto, there's no way to get them into most stores. They don't get onto most websites. So, those movies and those filmmakers are the first, obviously, they're going to start to be given away or sold at a loss. Just like it's like Frazier talks about the networks streaming some of their stuff, their content even at a loss. There's collateral value to doing it. And for these filmmakers, if they're trying to launch their careers, they just want their stuff out and seen. in a way, my concern is that the more of that stuff that comes out and can be successfully marketed, because let's face it, with most films, you pay in advance, and it doesn't matter what the quality is if the marketing's strong enough. It's kind of too late. So as the market starts filling up with that kind of stuff that's being offered at a really steep discount or given away for free, it gets hard for us to charge premium prices for films, particularly if those films don't on their face look much more attractive than the others. Or really there's a specialized audience that does their research, that reads reviews, that digs a little deep, and will buy something like, let's say, Little Children, and probably would pay a significant price for that movie if they really knew what it was. But on the other hand, probably the majority of the audience is responding to marketing cues and materials that make a film like Little Children look maybe no better than all the other films that were at Sundance this year. So if that stuff is being given away or on an inexpensive subscription service available, it's going to be difficult for us to jam up the prices on quality movies. So it's an issue.
I was going to say, one of the things that's interesting is, you said, based on the windows and how will everything be available on demand, the product actually changes depending on what window and what platform it's on. You have unrated extended director's editions, or you have interactivity on some platforms, or extra scenes on the web, that kind of thing. So I think it's actually very complex, what the product is and how you can price it, because it's a different audience that is going to consume it in one window or one platform versus another, and many people who are going to come get multiple bites at it because they'll watch Lost on TV and then they'll go to the website to get little extra bits, or watch it on their mobile phone for something else.
So Andrea, how do these multiple platforms for your content affect things? Do you think they help? Do they affect your creation of the content?
They don't affect the creation of the content, because the goal is simply to get a hit show. So what they do, though, is require you to, again, as I referred to earlier, become an event that you can't miss. So, most people are not going to miss Grey's Anatomy at 9 o'clock on Thursday. They're just not. But the great news is, for those who do, our strategies with respect to distribution is that you can see that ABC is trying to be a service to viewers wherever you want to get the product. So if you miss it on Thursday night, you can watch it on the ABC player for the foreseeable future, as long as you're willing to watch the commercials. If you don't want to watch the commercials, you can download it from iTunes and pay $1.99. So, and eventually I'm sure there will be some sort of mobile strategy. I don't really know. Not my territory, but anyway, that's the goal. So, I think the key point is you have to develop content, though, that people want. Content is king, ultimately. If you don't have the content to distribute down all of these pipes, then there's no point to the pipes.
But so do you think that the programs need to become more event-oriented than they were 10 years ago?
No, I think that for the broadcast network play, they need to be, because if my goal is to get as many people as possible to watch the broadcast network play, then they do need to be. But for all the otherwise, I think it's just about making great shows. I forgot what my other point was. Anyway.
I couldn't agree with you more, by the way. It's the one thing that sells film or television is that it has to be good.
Yeah.
People who watch television and see movies aren't dummies. They know
Right.
what's good and what's crap. And over and over and over, what makes film and television studios profitable? Good programming, period.
Right.
You could argue that sort of the proliferation of choice and the increasing sort of on-demand makes that even more so. And I think you said that because, if you have 5 networks, you need to watch whatever's on. If you have 500 channels, you get digital cable acting as a sort of bad quality DVR. If you have a DVR, your subset of choices changes again. And so the bar continually goes up for what you're prepared to watch.
Yeah, I think that's a very, very good point. I think that the quality of programming has only gone up because of the choices. So if you look at the dramas that are on TV, right, some of the best television ever is on right now, whether it's Grey's Anatomy or Lost or, CSI. And if you look at that compared to what dramas looked like 20 years ago, the competition is forcing the quality up.
And how do you think user-generated content is changing things? For instance, NBC found a show nobody's watching that had been left for dead, and it became a huge hit on YouTube, and so NBC found the creators and resurrected this show that there had been a pilot made, and then that was it. And so they were really taking its popularity on YouTube as an indication of the fact that it would be a hit show. Do you think that user-generated content is either, sort of something like YouTube is either providing content or acting as an indicator of trends, or is it shaping the content at all?
For me, it's not shaping the content. It remains to be seen whether that show will work on NBC or not. I think it's an interesting place to look for development. I get inspired by looking at clips all the time there. You can't take one of those clips and turn it into a TV show, though. VH1 actually tried to package a whole bunch of YouTube clips into a show, thinking it would be like America's Funniest Home Videos, and it didn't work. Yes, it's a competitor for people's time, though, and their eyeballs. But ultimately, I think that there's room for everything, and that people will not lose their appetite for a great film or a great 1 hour ride on a TV show just because they have much more choice in YouTube and a number of other things.
And I think the other point there, not to lose sight of, is the average American watches more television in a day than they work.
Yes.
And the amount of time they spend on YouTube is, zero in that comparison. So, as far as content goes, I think there's an interesting question which you've answered. But in terms of, engagement, share of voice, it's very low.
But you mentioned earlier that the cost of putting these shows like Grey's Anatomy are lost online, so people can remain engaged week after week, even if they miss the scheduled time, is very high. Do you think it makes sense for the networks to be distributing on all these platforms, on iTunes, on their own websites? Is it financially viable?
There's a couple of interesting questions in there. One is windowing and supporting the major show, which you touched on. And so to the extent that you can catch up an audience in the same way as you would have used a digital channel before and increase the popularity of an emerging show, then it makes the world of sense. So, in terms of building loyalty, it also makes sense as a platform for advanced advertising. And so there's an option value there too. What's the future CPM you can get for something that's targeted if you have enough scale in the buy? That's a future potential. And there's a couple of other questions that are open there too. How much advertising can I really put in it? So it's not clear that it's always going to be unprofitable. But there's another question in there too, which is leaving aside the broadcasters, what about the MSOs? And so at the Media Governors Council, Bill Gates stood up at Davos this year and he said, well, it astounds me that people don't realize that 5 years from now we'll be using a completely different system for television and that people will find this linear TV to be not very effective. But if you go and run the numbers, the cost to put television online, the entire viewing experience, is mammoth. And as you scale that back, you say, well, the MSOs and ILECs are going to spend $30 billion over the next 5 years on high-speed data. Video has the power to multiply that by more than 5. And so you've got to wonder, at what point does either the consumer's preparedness to pay for data or the MSO's preparedness to lose margin mean that there's going to be a limit somehow to what they're prepared to transport? So I think there's two debates. One is, what do we do in terms of windowing? What do we do in terms of content formats, and what are people prepared to pay for? And then there's another debate going on at the same time, which is how much TV can we move to a digital platform without running into fundamental limits in people's preparedness to pay?
So here's a question. In a world where the distribution is shifting, or the power in distribution is shifting, who wins? Is it the new distributors like iTunes, Apple, and iTunes and TiVo, which sort of provides a different window? Or is it the content creators because their content can be viewed on all these different platforms? Who's the ultimate winner in this new distribution model?
So that's a good question. Players like Apple and TiVo, at least with the current business models, are a very small subset of viewing. So again, it's a scale question. I'm prepared to pay $2 a show for TV downloads, but if I worked out my average viewing over a week and multiplied that by $2 an hour, my cable bill would be very high. So that's a very small proportion of your overall spend. As you start to expand that and you say, well, what about putting TV online? What about the advertisers? It's less clear to me who wins. in that scenario. And actually, I'd be very interested in the panelists' perspectives there.
I mean, certainly I think that the content creators and the talent who are in that content went out. It's a matter of, because to your point, you're right, you're not going to pay $1.99 for everything, but you might for your 4 favorite shows. And so the content creators of the 4 favorite shows win if they can negotiate effectively with every distributor to get the appropriate piece. And which is why I think talent prices keep rising also, because whoever can, I mean, I don't know, Jeff could speak to this more than I can, but if you can open a film.
Yeah, I mean, my point of view in this is that we invest millions and millions and billions of dollars on creating this product, and we intend to sell it. And so through that, it behooves us to find as many avenues to get it to the consumers as possible in a legal manner and for money. But along with that goes the fact that we have to control the way that we spend the money. How much money are we investing? It's one thing if we open up all of these new avenues to get it all to you in whatever way that you want it, and we're getting paid for that. But if we're doubling our production cost every year, or our talent costs every year, or our back end every year, then it's really not going to go anywhere. So there are some kind of management issues behind the studios and behind the creation of the product that still has to kind of be in balance with how you're opening up these new avenues of distribution.
I was going to say one thing that's interesting is that there are a fixed number of hours in the day, as you point out, and the audience for most of this product is relatively finite as well. I mean, you go internationally, obviously there are more people who are coming up on different platforms, but I think that's why the hit shows will always win, right? Because everybody's going to want them. And in terms of will it really cost that much to build all these new networks to scale? I actually have a different viewpoint, which is, well, there are 2 options, which is one, Google's going to build it and pay for it all, or number 2, the ILECs and the telephone companies are going to go build their own distribution systems, for television. A lot of them will bankrupt themselves doing so, and those assets will be acquired, by somebody like Comcast or someone else. I mean, the whole history of networking is, people build too many pipes, they all get fire sold, and then there's more bandwidth than you know what to do with it. So eventually, IP delivered content, everything on demand will come. It'll be a matter of time, and I think eventually it's going to be the law of large numbers. If you're already Comcast or you're already AT&T or Verizon, you will pick up those remnant distribution assets from somewhere else.
I have a slightly different perspective on who the winner is in this sort of new universe, which is that I think it's brands. And I think it's brands because right now brands are, when we talk about investing in a film and needing to open a film, again, we're back to the idea of marketing, and the brands generally that open a film, the brands that guarantee some sort of downside protection on a movie, are movie stars or franchises. You can make Lord of the Rings without movie stars. If you're making a drama, you need movie stars. The director can be the star, but it's always about having that name or label to put out in front of the film and knowing that that's the thing that's going to get people in that opening weekend. Even when we talk about TV hits and you look at all these spin-offs of shows, The Bachelor, well, The Bachelor's a brand, and the success of having created the brand, which is probably incredibly difficult, but once you've done it, it opens so many doors. It's so, I think, empowering. You're not starting from scratch every time you make a film that in any way related to the brand. And I think the future of this unusual form of multi-platform distribution is the rise of new brands, and it may be the strengthening and refining of existing brands like existing television networks or websites or talent, but I also think there's going to be a new type of brand which serves as a cultural filter, probably for content that crosses media, that goes from written content to music to film, but these are sort of labels that can be sort of ongoing marketing tools that connect a certain kind of content with a certain kind of audience and probably ultimately reduce the necessary risk, the marketing risk and expense for releasing content.
Yeah, I think that's a very good point. I think brands will really help you navigate among the huge amount of choices that are only going to get larger.
What about this idea of being distributed onto YouTube? I know some companies are leaking their content to YouTube because they want that exposure, and other companies are suing YouTube. So and I know that Andrea spoke about this a little bit about, sort of how to navigate this, but what is the attitude about whether or not you see, for films, is YouTube a marketing device, or is it somewhere where you have to worry about your content being, your intellectual property rights being violated?
I can't really speak to, I'm sure we're protecting our main content. I do use it for PR reasons. I don't personally, but there might be, a never seen before clip of something happening on The Bachelor that's leaked onto the YouTube that we certainly couldn't put on ABC because it's too hot for ABC, but might drive people to want to watch our show. So it can be very effective that way.
So another trend in the industry is this idea of collapsing windows. Before, after a syndicated show was on, you'd have to wait months or years before it went to syndication, or before a TV show was available on DVD. Movies, you'd have to wait months and months and months before it came out on VHS. And now the windows are shrinking for all sorts of different distribution platforms. So what does that do for all of these different industries? And whether it's, distribution on TiVo, you can wait and watch something 45 minutes later. What does that do to the industry and to the content?
I think one of the traditional arguments for collapsing windows is that, and I think the studio and networks can, I don't know whether they agree or not, is that you have all this marketing spend that you're putting into a new release or a TV show, and you might as well not have to keep marketing it for one window and then the next window and the next window and the next window. I don't know if that's strictly true. I think, for things like large films and hit TV shows, while you've got the awareness, it may make sense to, have consumption all at the same time. But I'd be curious to hear what.
Yeah, I think that is a big part of it. Is marketing dollars, and the importance of the opening weekend is greater than it's ever been before. And some studios are more aggressive than others on going to video more quickly after theatrical release. We're not one of the more aggressive studios in doing that. We like to have a healthy theatrical window. But then once you do hit video and you hit all of those downstream markets, whether it's network television or pay television or syndication or whatever, those are all kind of starting to move around a little bit. Network television is not as much of a buyer of film products as they used to be in the traditional network premiere window. And instead of ABC or Fox or CBS buying film product, it's now FX or TNT that buys inside the network window, and I think that's going to continue to change. So once a film is outside of your theatrical window, then it's going to be interesting to see where we change things to see where to put it out to you where you can watch it. It's really going to be up to you, I think. I think that the windows will change and shrink and meld and cross over and everything depending on what you decide you want to pay for it and how you want to watch it. Back to the theatrical window as it is, I still think that all of that marketing spend that we put up is important to drive people into those theaters. That driving people into theaters is what bolsters our marketing spend. It's what gets you talking to all of your friends about the great movie you just saw, or sometimes the horrible movie that you just saw. But there is still a different experience watching it in a theater than watching it in your home alone or with a friend or whatever. But I'm not quite sure where I'm going with this. But I think what I'm trying to say is kind of post the traditional theatrical window, I think things are going to start to kind of meld together in some way.
There are interesting questions in the TV space too that I think run parallel to that. So, if you've got a successful TV show, suddenly you've discovered this large DVD revenue stream, which is quite attractive. You've always had syndication if you're the content creator. Now at the same time, you have to decide whether or not you're going to allow digital distribution. Does that increase the value of my franchise in the first run and therefore increase the value of the remnant syndication rights, or does it dilute them? I think there's a lot of questions that are not really answered. And I think it'll be a fascinating time for windowing experiments as people just try and figure out, well, what is the formula that gets the most across a complex and increasingly complex set of windows.
Yeah, I mean, I think that everyone's in experimentation mode. I don't think anyone has the answers yet. But the other complication that broadcast networks have is that we have local stations who carry our programs and are extremely resistant to having really repurposing or to have a show run. Yes, it runs on the network, but guess what? You can get it on the iPlayer if you don't catch it, because that's taking eyeballs away from them. And so that's a big difficulty. And yet, for me, for a show like a serial show for me, like Dancing with the Stars or The Bachelor, to have a second run somewhere during the week for people who missed it the first time would actually be helpful for driving the ratings of the series. Or Jimmy Kimmel's another example where a cable channel called me up the other day and said, we'd love to run his show the next day at 7 o'clock at night, and we'll promote your show that night. That's a good thing for me because it's marketing. But an example of another battle we're having is Extreme Makeover Home Edition is about to go into syndication, and they're going to take it out next year. And if a cable channel has it on in prime time, it's going to hurt our ratings on the network. And so there's a big debate about how that's going to work right now. So we're just trying to figure it out.
Here's a question that probably only a couple of you can speak to, but it's about film financing, and I know there's a bit of interest in that in this Stanford Business School community. There's been this flood of independent financing in the film world. It's private equity financing, it's hedge fund financing, it's the banks organizing financing. Yesterday we heard that Tom Cruise and Paula Wagner for United Artists just raised $500 million, which is not a surprise, but it's still, it's everywhere. So the question is, and I'm very curious to hear what Micah can say about this, sort of where is this money, is this a smart investment, and why is there this flood of money into such a volatile industry?
Well, there are a lot of reasons, I'm sure, why the money's coming into the movie business, and I think, frankly, salesmanship plays a big role, not by me. There are a lot of people, this is a sexy business, and a lot of people take, risk that they probably shouldn't in order to be a part of it, and that goes all the way, from the aspiring actor who drops their career or potential career and runs out to Hollywood to become an actor, to the executive or the law graduate who leaves a lot of money on the table to be a part of this business. And I think, frankly, investors and certainly the banks are no different. They try to find a way. They struggle to find a structure that justifies the investment because they like diversifying. Everyone needs to diversify. They like diversifying into the entertainment business. And no one wants to get punished for having done so. But if you can justify the investment with a model on paper that seems to make sense, like you've limited or eliminated your risk, then there are a lot of people who want to do it. There's also, I think, sort of a herd mentality that's happened where because there were a few very high-profile deals in Hollywood, slate deals or fund deals, suddenly everybody feels the need to have one of these kinds of deals in their portfolio. What I would say about that is that, we certainly, having looked at a lot of these deals, we didn't initiate the first few of them, and we're not doing the studio slate deals, and Jeff can speak to those. But what I would say is that we're very concerned that most of those deals don't make sense on paper, and if you do more than like a cursory look at them, you could tell those investors are likely to lose their money. Many people already have, and that's why I'd say that for us, the mandate right now is, we're trying to capture the best and sort of smartest of these financiers and protect them, create structures for them that we think do make sense, and try to keep their money in the industry beyond the point at which most of the other money leaves. Because, as these deals start failing, which has already happened and will continue to happen probably over the next few years, there's certainly going to be a retreat among most of the banks and hedge funds and private investors. And, if we can keep a few of these companies happy and healthy and profitable, then ultimately it's great for the talent because we're increasing the number of buyers and potential financing options. And the movie business can be a great business. I'll give one, example about the structure. A lot of the movies that my group's been involved in putting together have been, high quality films with movie stars in them, but they're movies that studios didn't want to finance because they felt risky, at least at a high budget. So as an example, a movie like Crash or Good Night and Good Luck or Brokeback Mountain, these are challenging movies, but at the same time, they're projects that the talent wanted to participate in so badly that they're willing to forego their fees up front. And their fees can be enormous. So you can take a movie that maybe for a studio under the traditional model would cost $40 million to make or $60 million to make, and you can make it for $15 million, because that's the actual below the line, the physical production cost of the movie. And the talent will accept a very big piece of profit as their compensation. Well, you take these movies and you finance them through some of these new structures. You basically you provide a loan. You can guarantee on most of these films not only that you're going to recoup the budget back when you when you distribute it worldwide, but you can pre-sell these movies on the strength of their cast overseas, not touch the domestic rights, and you can capture the entire investment back. So really, you can go to these funds and get what in essence is a loan. So you can go start making the movie. Let's say you're making it at $15 million. Go pre-sell the rights territory by territory internationally. Get anywhere from $15 to $20 million guaranteed. And then what you get out of North America is what you get. But for those investors, for the banks or private individuals that are in the position to make those aggressive loans, or if they're considered equity investments, the movie business is a great business. And there are a lot of financial clients of ours and partners who we work with who've done nothing but make money in the last few years, basically being in the right place at the right time to get those kinds of deals.
What do you think?
I think what I would add to that, I actually agree with you almost entirely. The one thing I would add is that the film business is a portfolio business, much like venture capital. You have a slate of films every year, and some of them are going to work and some of them won't work. Hopefully, as many as possible work. And across your slate of films, hopefully you make some good money off of it. And potentially very, very high yields, which is, I think, the second reason that all this outside money is coming in, the other one being that it's a sexy business. I think that the thing that's so unique about the film industry is that time and time again, unsavvy investors have come in and gotten burned. And that doesn't necessarily have to be the case. And I think now what we are seeing, like Mike is saying, the structures are kind of it's kind of working itself out in a way that it hasn't happened before. There have been pockets of time in history where there was a period in the 80s and before that where outside money was coming in. Some of it got really burned and everyone got out. And now we had a couple of big slate financings, some of which haven't worked out so well. Some, like the Fox Dune deal, which have been spectacular, have worked out. And people are trying to tweak it to figure out what the right structure is for investing. Now they're starting to go towards, instead of backing studio slates, backing producers like the Tom Cruise deal, or there are a couple other ones, Joel Silver, that have been running around, maybe backing an individual slate of films. Backing Tom Cruise is the better bet than backing a studio slate of films. And only time will tell. Maybe Tom Cruise will make a slate of fantastic films. Maybe he won't. Maybe, if an investor that's investing in all of our films will do fantastic, maybe they won't. We hope that they will. But I agree that if they continue to do poorly, they'll go away. It's just the way that it goes.
So this is probably a good time to open up to questions.
Think about television content and film content as two separate pieces of content. And you think about where they are in their sort of monetization life cycle. Where do you think there's more upside over the next 5 years? If you had to pick one, would you rather be in the television business or the film business?
Andrea?
I have no idea.
I don't know enough about the television business.
Yeah, and I would say
really
the same thing
it.
about the film business.
I'll say about the television business that I think that the kind of the new thing with television series going on to DVD has been a remarkable change to the DVD business as a whole, and to the extent that television product can continue to find different avenues, then that's going to be significant upside. I happen to think that we have a lot of upside, but again, I can't compare it.
And I happen to think the appetite for both will continue to be strong. I don't see that waning at all.
In what ways and to what extent does online piracy affect the industry?
I'll be delicate on this, because there are certain things I can't speak about. But it definitely affects our business, much like it affected the music business 5-10 years ago. The challenge for the music business was to find a way to get its product to its consumers in a way that makes you want to buy it. I think that we're working on that right now, but I think I have to go back to what I said before, to a different question, which is we invest a lot of money in our product and we intend to sell it. So to the extent that piracy is going on, we're going to try to do whatever we can to combat it.
I think it's the reason that the ABC player came about was, to Jeff's point, we need to be ahead of, we can't allow what happened to the music business to happen to us. So we're still offering it for free, but you have to watch commercials, and people, or you can buy it for $1.99 on iTunes. But for the most part, people would rather do the right thing than steal. So if you can offer them those options, they will take them rather than steal.
So you talked a lot about distribution and the new channels that are coming up in online, and even things like keyboard that have changed reloading and distribution a lot in terms of what people record and watch, when they watch, and things like that. But one thing that hasn't translated to is actual change in programming, because some of these distribution channels, they reflect a need in the consumer population, like people want it on demand. Like today I watch more TV because I can watch it when it's convenient for me rather than when it airs and then it's gone. Right. I catch more shows today because I can watch it when I'm done with work and I have time for it. And when I have time for it, I don't have that much time for it, so I skip all the commercials in between and watch the 20 minutes that the show is. But there hasn't been too much programming that's taken this paradigm and tried to make it a better monetization model. I know there's some experimentation on in-program product placements and things like that, but nothing really has taken off. What's your take?
Well, no, I think that advertisers are more and more aggressive every day about trying to do product integration into shows and films, and you try to do it in the best way you can without hurting the creative of the show, because ultimately people watch the show to be told a story. And so if you can do it without the product getting in the way, then it's a great thing for the advertiser and a great thing for us. And I said this earlier, the best example of that for us was Sears being integrated into Extreme Makeover Home Edition, because it was a win for the advertiser because they got a halo effect related to the show. It was a win for us because we got money from them, and it was a win for the show itself because Sears gave a lot of money to each of those homes.
But it still had the same commercials.
Well, you have to.
Right, yeah,
I don't think integration will ever replace commercials. If there's not enough money, I don't think there's a way for that to happen.
Yeah, I mean, the other reason is, irrespective of the money, it's very difficult to integrate.
Yeah.
I mean, it requires people to think about the fact that a car is going to appear in a particular context. You just can't go and spend $100 million on 30-second slots like you can, for more standard media. So it has a fundamental ceiling.
Right.
And the other ceiling is what people are prepared to see as favourable, even credible.
Yeah. I mean, that was my point about the creative. You cannot let the advertiser has a message they're trying to get out. They want to tell you every feature of their Chevy. We're not going to do that inside of a show. So they have to buy advertising to get that.
There are a couple of products, though, that either exist or we'll see more of. One would be, for a DVR, for instance, just to put a message on top of a fast-forwarded commercial so that you can still get an exposure even though it's being fast-forwarded. Potentially you might see more, sub-branding or tickers along the bottom or something like that. There are things you can do with different levels of aggressiveness to put ads into shows.
Yeah, I mean, there are a lot of programmers and advertisers who have tried to either engineer around TiVo or engineer with TiVo. Our opinion is that when they engineer with TiVo, it usually winds up better because, consumers are going to fast forward whatever they're going to fast forward. But, when we offer, TV extras, that if you're already recording a show, we can download something extra for you. Or if you pause a show at a certain point to, answer some code that you then SMS, and then you get some text back from the advertiser, that's the sort of product integration that works for everybody.
By the way, people always talk about how TiVo's changing people aren't watching commercials. Well, the remote control was when people stopped watching commercials, when they had the power to turn the minute that you went to a commercial break.
Yeah, there's a couple of media executives you find out there that say that actually it makes people much more engaged with the commercial because they have to figure out when to stop the fast forward.
Well, it's true. The last pod is the most valuable pod because you have to stop before the end of the commercial.
I had a question for Andrea, and I think it implicates Evan as well, which is we've talked about the ad-based models for TV, but I'm wondering what your take is on sort of DVD sales and syndication and international distribution as being benefited by DVRs and TiVos, and in fact, like the reason why you're not going across the table and strangling Evan is not because of the criminal, ramifications, but because the TiVo is actually, ironically, helping build an audience for shows like Lost and Desperate Housewives and Grey's Anatomy that's translating into DVD sales and increasing syndication possibilities.
Well, I'm not sure that it's translating. It's translating into the strength of the program on ABC. It's probably hurting DVD sales because more people are watching it on TiVo. I don't really know. I can't really speak to that. And I'm not sure how it relates to international. Explain.
Or
syndication.
not international, domestic syndication. Saying that the fact that people are recording these shows and able to watch them when they want is helping build an audience for them, which is then translating to increased ability to syndicate or sell DVDs or keep the program in the public consciousness longer.
Yeah, I actually don't know that since I don't deal with the distribution side of it. So, sorry, I can't answer that question.
I mean, I guess the one thing that I would say is we know that, TiVo subscribers watch more TV than everybody else, whether that's within the same amount of time by fast-forwarding commercials, is due to some of that. We find that DVR households in general, not just TiVo, but if you have a cable DVR, you are a kind of quasi-super consumer of television. So if that helps drive the audience, then so much the better. The advertisers have to work around that the way they do. I think it'll be interesting with whether it is DVD package distribution or our experiment with offering TV shows through Amazon, whether people come back and they then purchase a show they've already watched because they really, really want it or something like that.
We heard earlier that the talent prices keep rising, and I'd like to hear your perspective on the opportunity for, I guess, new faces to sort of enter this market as well. Not talking about myself, but just wondering in general, what could be a catalyst for perhaps expanding the pool of talent and that sort of supply there.
I mean, I think the area that I develop in, unscripted series, has changed the game a lot because all of a sudden it went to 0% of network schedules to up to a third of network schedules. Much cheaper to produce because there's no talent, there's no actors, and there are no writers in those shows, so the economics are much better.
I would say that it's always changing. I would say that the pool is refreshing. I mean, it's we just had Jennifer Hudson win, which is from a reality show. Yeah. She won an Oscar for Best Supporting Actress, and she's as new as it gets. And we're all they're always going to be the big stars who can carry a movie. But if you look at that pool of stars, big stars versus even 5 years ago, they're different.
America loves creating new stars.
Yeah, absolutely.
The other impact I would say of talent prices rising and the economics of the business shifting is that talent we're coming out of an era where talent was extracting all of their value up front. I mean, basically nobody trusted, whether they should have or shouldn't have, nobody trusted the sort of back end of any of the projects they did. So that's why talent fees got as enormous as they did. And the reality is the people who were paying them, whether it's a television production company or a film studio, they were paying them because they were worth it, certainly in success. Some actors are worth $30 million or more. But what's happening now, I think, and I was hired specifically because the agency is interested in investing talent more deeply into their own projects, and they would rather gamble and have a greater share of the upside of films that are working and have, perhaps a smaller guaranteed income on those films that aren't going to work. And that's going to be, I think, a really positive thing for the industry. And it's also, frankly, going to lead to an environment where, we think talent makes a lot of money now. Probably in the not-so-distant future, some talent is going to make an incredible amount of money. I mean, Tom Cruise is an example probably of the most recent people, but he stands to make an extraordinary amount of money on his movies. We don't think about it. We look at athletes, we look at people who in the sports world make crazy amounts of money for just doing what they do, just playing sports. And I think the sports industry and sports agents have learned how to monetize really effectively those athletes' true value to the entertainment that they provide. We're just starting to do that really in the movie business. So I think content may get cheaper at the front end, but it's going to be really lucrative for talent in the back end.
What's the specific economic end? If you can give some ratios of how the fee sliding has changed.
I mean, the fee sliding from certain talent making as much as $30 million or more up front on certain movies down to taking nothing, $250,000. But then the back end, it is possible to make $100 million or more. A lot of people could do that if their deals were structured differently on their movies. So when you see a movie gross $1 billion, there's a lot of money to go around, and most of it hasn't been flowing to the talent. So
structure a back-end deal with us on a hypothetical movie. So we're hearing from Jeff a concern about exhibition and potential impact on the box office on someone's home theater setup. So are you structuring back-end percentages as a function of domestic box office or international box office? Or are you structuring as a percentage of DVD sales, international or domestic, which, as we've already heard, is being impacted by download to own, the internet, YouTube? So are you saying, okay, well, we're going to discount whatever you can make on DVD and then say, we'll assume we can extract some rent from a download to own or an advertising supported online model. So as you build this out, say I'm a client who would get $30 million, and you say, well, here, I think you can make $100 million. What do you discount? What do you say is the growth rate, and how's that calculation changed in the last week?
That's a complicated question. Yeah, here's what I can say. I mean, there are a million permutations to talent deals, and a million ways the back end can be structured. The ideal structure, usually when I'm negotiating something, and I'm advocating usually for the film or for the financier. I'm usually not advocating on behalf of the talent. But what I'm arguing generally is that a transparent deal with low fees where the talent is cut in at gross profit, that's the best deal for them. If the film makes money, we want the talent to make money. If the film loses money, if the person who financed the movie is not making a profit, it doesn't make sense for the talent to be getting back in. So, I think the fairest deal, the deal that's likely to work and carry forward, is a deal where it doesn't, downloads can do well, they can do poorly. What really matters is how much money is flowing back into the financier's pocket. When are they actually recouped? Not when are they recouped through some accounting fiction that's, being created by MBAs. So that it looks on paper, but that's the way it has worked. We live in a business right now where there's a bunch of different realities. There's sort of the actual reality, the actual economics of the movie, and then there's the sort of structure we've created so that under an individual participant's formula, the film is in profit or not. I think the best deal for talent and the one that makes the most sense for the industry is one where when a film is actually profitable to those who gambled in the investment, the talent is getting an incrementally larger piece of the profit.
You do have a different perspective than a lot of your fellow agents. That's for sure.
I'm not beloved within the talent.
No, I know, but I mean that is absolutely from a representing a movie and an investor in a movie perspective. I mean, if you're a talent agent, you're these days, as it was 5-10 years ago, you're still looking for that piece of the gross.
Yeah, no doubt about it.
And that's what you want. You want the piece of the gross, and that's kind of all you want. And on some level, you are just going to be capped out at whatever the gross is, as opposed to taking a larger piece of the ultimate profit of what it is.
That's exactly right. But that's why I think the frontier of the industry is the quality film sector. The way you beat down the talent agents is by starting with a piece of content, a script, a remake of a foreign film that's so good that the talent needs to do it, period. And the mandate to the agent is, not tell me which of these few potential projects is going to give me the most money, but find a way to get me into this movie.
Yeah.
And, that's so the greatest amount of leverage a financier or a producer can have is to have content that talent desperately wants to participate in. And for me, as somebody who's trying to shift the economics of the business in a way that ultimately will benefit even the talent agents, but it's easier to start with those projects. And I think as Jeff will acknowledge, getting a few very successful projects structured this way is suddenly going to change the kind of deals that those same talent agents want. They want gross now because they know gross.
Yeah.
But when someone's making, extraordinary amount of money, someone who shouldn't be, when a sort of A-, a B-level movie star makes a huge check on the back end of a film, suddenly everybody's going to want a deal like that.
I think we have time for one last question.
How do you see the battle between new media and old media playing out? For example, Google video shows CSI, and you have new emerging content such as Amanda Condon from Rocket Boom. Will regular television broadcasted through cable and television through the air disappear?
I don't think so.
No. Yeah, it's a difficult question, isn't it? There's so many pieces in it. I mean, the one thing you really can say is that old media takes a while to go away.
Also, radio didn't go away. It's just a matter of, certainly the competition has gotten much, much harder. I mean, and more intense. And again, there's a fight for a person's time. That's what it's about. But people still want to relax and watch TV when they come home from work. They still want a passive viewing experience. They still want to sit on their sofa and relax and be told a good story.
Maybe we should end on that note. Thank you all for coming.
Nice to meet you.
Out of the last question, you just jumped in.